bright and sprightly market. If indeed the index respected the mark at which it found support, which is the major put writing on the Nifty, and that was 24,900. We have gone past that quite convincingly today and trading fairly well for our markets. And by the way, yes, banks are the driving force. IT's come off a little bit, but it's a strong 1.17% up move for the Nifty Bank, which is actually a really good sign. The key driver of the markets today. We spoke about it in the trade setup that there are some murmurs around maybe HDFC Bank and banks taking the charge higher. I think we've seen some signs of that today. So just a bit of a lucky mention, if you will. Mid caps and small caps and the market breadth very quickly on your screen once, because they're not quite there, especially the mid cap space wherein the valuations are very high. But the small cap pocket too, about 0.14% higher. So fairly flattish that way. So the breadth is kind of okay. I mean, nothing to write home about. Get the heat map up on the screen and just show you what the gainers and losers are looking like. So a fair degree of more losers than what they were, with the likes of ONGC, Maruti. Interestingly, a turn of event for Tata Steel, because it was amongst the top gainers and is currently about 1.3% lower in trade. So metals have given up some of those early morning moves. What's doing well? Wipro, the bonus issue working beautifully for Wipro. The top gainer throughout the trading day today. Giving it companies Tech Mahindra ahead of results, HCL Tech and some others. And the big boy, HDFC Bank, up 2% higher. This is a solid contribution to the Nifty points. HDFC Life 2 ahead of numbers tomorrow is doing well for itself. And as I said, ahead of numbers today, HCL Tech is doing okay. Wonder where Reliance is, because those numbers are expected today. They're not expected to be very strong. Reliance is kind of lying somber, 0.07%. And before I hand it over to Tamanna, and as she walks in, have to mark one stock which has had a breathtaking last 1.5 months, and that is BSE. The stock of Bombay Stock Exchange has had a move like very few other large liquid stocks have. 4775 and counting. And the 1 month chart, Tamanna, of BSE tells you a story which very few stocks can really tell. Look at that, 64% on an exchange business.
It's defying gravity, it's defying logic, because one would think after the F&O regulations come in, you would see volumes down, but perhaps what NSE's loss is BSE's gain.
Exactly.
And that's a sort of a re-rating. Stunning move. We should ask our technical analyst today if there's more left on BSE, but it's not just BSE that has our eye this afternoon. Take a look at the broader markets as well. And you're having a decent kind of a situation. Not that great on the Nifty Mid-Cap 100. I mean, it's more of a Sensex and Nifty story right now, thanks to an HDFC and ITC heavyweights like that. But look at the small cap index as well. That's pretty much flat. So maybe portfolios won't look that great today, but overall market momentum and mood is good. Let's pull up the advanced decline ratio and just get a sense of what is the breadth of the market and whether you're seeing that positive move. And not half bad. Advances over declines right now, and both of them soaring. So you've seen good volumes overall coming in. Sectoral indices, let's just take a quick look at sectoral indices. And while Nifty, IT, Realty and Bank, these are the three strong pillars. Nifty Realty has seen a huge upswing, but that's thanks to Oberoi. The story over there is about Oberoi Realty, which has really come in today. Nifty IT, HCL Tech is looking good. Wipro is looking good. So it's Wipro and HCL Tech which have pulled up that index. And of course, no prizes for guessing. Bank Nifty is all about HDFC Bank and others today. Let's get to specific stocks and results. Is one focus. Gopal Snacks, good note out from MK. Results are expected as well. That's one of the stocks that is in focus this afternoon, about 4% up. Alok Industries, numbers weren't great to be honest, 2% down on that stock. Those numbers have come in. Avenue, I think stock of the day, theme of the day is Avenue. What is ailing Avenue? Very, very, very painful kind of day after their quarterly results have come in, and we're going to have a detailed bull versus bear case for Avenue ahead on the show. 8.5% down. Bajaj Housing Finance, the 1 month anchor book lock-in has ended, and boy, how it's cracked. Nearly 6% down. Saregama was the other one that I thought was interesting. Fears of a bidding war for Dharma have seen that counter crack 6%. Quite a few others that are in focus, some metal, some IT names as well. Aptus is the other one, which for no real reason that we can fathom right now, has been doing very well. So there's some of those, Niraj, out there which are stock specific, but in the broader markets, the story is not as exciting as you're seeing on the Nifty. That's because it's the heavyweights that are moving the market this afternoon.
Completely true. And in fact, that should be the question to Kunal Shah, Senior Technical and Derivative Analyst at Sharekhan, as he joins us on the show. Kunal, good having you as always. Thanks for taking the time out. Interesting day today, wherein banks have propped the index higher, while the market breadth has kind of constricted, and just the broader markets are just kind of making the presence felt. How does this augur for trades per se? And is there a Nifty trade that you have for the day today?
Good afternoon, Niraj. Good afternoon, Tamanna. I think definitely, as you pointed out, the broader market is something where you might see a neutral stance, but it's the headline index where the positive momentum is. Clearly, if I talk on index perspective, yes, definitely we are heading more higher. That is toward 25,234. So even from the current levels, there is a 100-point upside which is left in the Nifty index. Now, this is where the 20 DMA for the Nifty index again comes into the picture, the resistance zone. So we need to surpass that level decisively, then we move further higher toward 25,500. In today's trading session, the good part has been that the 50 DMA for Nifty, which was placed at 25,054, we surpassed that and we are able to sustain above it. And in fact, we are going to close above it. So definitely a more 100-point quick move could be seen in the Nifty index. Yes, we have a Reliance result post-market hours, so probably that would have an impact in tomorrow's market trade. But yes, at the current level, till the time the 50 DMA is not breached, my view will be bullish. 25,200 to 50, which is the resistance zone, we should touch that level on the upside. When it comes to the Bank Nifty index, here the entire strength is visible from the banking space, whether it's an HDFC Bank or an ICICI Bank. So that is positive for Bank Nifty. Bank Nifty has surpassed 51,500 mark. That is again first positive trigger for the Bank Nifty index. It is likely to head towards 52,200 mark on the upside. And once that is taken out, then 52,500 could also be achieved. So Bank Nifty is much more positive compared to Nifty at the current levels. But both the indices remain in the buy mode.
Absolutely. Kunal, what is looking exciting to you this afternoon? What would be your top picks for the closing session?
Yeah, I think first will be your ABFRL. The stock after a 2 to 3 days consolidation has given a fresh breakout in today's trading session. The stock has taken a support at its 20 DMA and it is forming a higher bottom, higher top formation. So clearly the trend is bullish. Momentum oscillators have also given a buy signal at the current levels. So 345, 346 is where currently it is trading. One can initiate long, keep a stop loss of 338 on the downside, and look for upside targets of 355 to 360 on the upside. The second stock over here will be Timken. Timken is on the verge of a falling trendline breakout on the technical chart. So the stock has been a big underperformer in the recent times, if I say 4,800 to almost 3,500 levels. So stock has seen some bit of correction. Now on the technical chart, it looks this correction phase is over, and now it will again resume its up move. So Timken is a buy at the current levels, keeping a stop loss of 3,600, looking for a first target of 4,000, and second is 4,200 on the upside.
Okay, so Timken is on radar as well. I'm just wondering, Kunal, if you're looking at any kind of an upside for Avenue or any kind of a potential for Avenue after the beating it's taken today.
See, I think on the technical charts, if you see, if I look at the long-term charts, the next support for Avenue comes at around 3950, 3960, which again coincides with its 200 DMA. So that is the support level. So even from the current levels, you see there is a 200 to 50 point downside still left. Probably from those levels, we can see a pullback. So I think around that 4,000 mark, 3950 zone, that would be a good level for an entry, at least to play for a pullback rally. The overall bigger structure of the stock has one on the lower end, that is on the downtrend. So just to play on the pullback side, 4,3950, this would be a good ideal range to buy DMart and look again for targets of 4,200 to 50 on the upside.
Okay, well, let's, I would have, okay, let's stick to Avenue Supermarts maybe, because we'll try and get in a colleague, but maybe just before we get to Avenue Supermarts full-fledged, Kunal, it would be wrong to not talk about HDFC Bank and the move that it's made today. Now, the question that I have is, for somebody who wants to initiate a long, on HDFC Bank on this sharp up move today, and sharp relative to what HDFC Bank usually does. Are you saying a no or a yes? Why or why not?
Niraj, I'm definitely saying a yes, because if you look at the chart of HDFC Bank, firstly, it has never reached on the downside its 100 DM, and again, it has taken a support there, and we saw a bounce from those levels. The last 3 to 4 days consolidation, which was there, that got over. This could be again the first resistance for HDFC Bank on the upside, the 20 DMA. The first point is it is still trading below the short-term moving averages. So the 20 DMA is placed at 1701. So that if I look at as an immediate for a short-term trade, you can get levels of 1701, 1701, 1702 on the upside. Once it is able to close above it in tomorrow's trading session, that will add more value to the trade, and probably then we'll go towards 17,450, 470 levels on the upside. So I think at the current levels, yes, one can initiate long. Probably you can pyramid the trade. That will be an ideal approach. Add some positions right now. If it is able to sustain about a 20 DMA, then again you can add further fresh positions.
Okay. Well, that's HDFC Bank, but Tamanna, you were saying, right, that all eyes on Avenue Supermarts, and with reason. It's usually a very difficult stock to trade. Today also, no, you don't have short sellers out here. But the point being, the beating that it has taken and stayed lower tells you a story.
Yeah, no, absolutely. And despite that, what I found interesting is that brokerages are still quite bullish on the stock, or quite constructive on the company. There is this faith about DMart which is not going away. But what's the big story there? Is this a format losing, like DMart's, losing out to quick commerce? Is there a bigger DMart specific problem? In fact, let's get a bull versus bear breakup on Avenue Supermart. Mahima and Anushi joins us with that view. Okay, who's the bull, who's the bear, and who's starting?
So, since the stock is down almost 9% now, so I think I'll start first with the bear case. Well, in terms of why the stock is tanked so much, rates on the back of the Q2 numbers, it's missed estimates on all grounds and weak quarter overall for DMart. Now, a couple of things happening. The highlight of the results was that management has said that impact of online grocery formats is now visible. So their like-for-like growth is being affected overall with the rise of quick commerce and e-commerce. And overall, if we see, the like-for-like growth has been around 5.5% for Q2, which has been around 10% overall in FY24. And the DMart Ready business has also seen a growth of 22%. But overall in FY24, the growth has been around 24% for DMart Ready, Anushi.
Right, but now if you look at it, Q2 numbers clearly a miss across estimates if you're looking at. But you know, one thing which clearly stands out is their general merchandise and apparel business. Now, if you go back to our last few quarters, we have been seeing a sort of a weaker commentary on this, but now that has started picking up. In fact, the company saw about a 17% growth here in this quarter as compared to a 15% growth that it had registered in FY24. And the good thing about this business is its higher margins, obviously. So this higher margins is obviously a factor that one should be considering as we move forward for Avenue Supermarts.
Right, but you know, the kind of pressure is not just on the profit and loss, it's also on the balance sheet. There has been high capex investments that have been made, you know, on the back of land acquisition and store expansion overall, and the net cash position has decreased from 1230 crore in Q2 FY24 versus that of 400 crores in Q2 FY25. And overall working capital days has also gone up by 3 days, Anushi. So balance sheet position is also not looking very nice for DMart as of now.
Well, you mentioned about the balance sheet metrics that one should be looking at. You know, there has been a little bit of tension about how the company is doing across its key metrics or operational metrics, but if you look at its average basket values, now that has remained stable as compared to FY24 also that we are coming at. What would have been a concern if we had seen a reduction in this, then it would have warranted on how is the revenue growth going to fare for the company going forward. While we did see a revenue miss in this quarter, but this is still a comforting factor for the business as we move forward in the new quarters coming by, and obviously this metric will remain as an important point to watch out for.
Right, now in terms of brokerage views, where well, mixed views across different sell-side brokerages. To start with, Citi and Morgan Stanley have been the most bearish one. I'll start with Citi. They've given sell rating with a target price of 3,500. Now, what they're saying is that the EBITDA and profit before tax growth has lagged revenue growth in 7 out of last 8 quarters, and they've trimmed FY25 to 27 estimates by 4 to 6%, and valuation as a risk reward seems unfavorable at 82 times for FY26 estimates as a whole.
While Citi has a bearish view on this, Motilal Oswal sees a 12% of an upside in this company. They're reiterating their buy rating, and this is at a price of about 5,300. A couple of factors that they have mentioned over here is the 17% of the CAGR growth, which is expected over the next 3 years in FY24 to 23. So 17% growth in revenues and 20% growth in PAT is another factor that we should be watching out for. And with the general merchandise business back on track, it will support the EPS growth one is looking for. However, they did cut their EPS estimates by 8% for revenue and 14% for PAT if we are looking for this quarter after this quarter's result.
Right. So post Q2 results, Morgan Stanley has become extremely bearish on Avenue Supermarts. They've downgraded to underweight with a target price of 3,702. What they're saying is that online grocery format is affecting the like-for-like growth for DMart overall. And the highlight of the report was that they're saying that online and offline can coexist, but defenders cannot stay defensive. And on the back of this, they've lowered their FY25 to 27 estimates by 17 to 18%.
While on the other side, if you look at Bernstein, now this one was an interesting note because they've maintained their outperform rating, and this is at a target price of 5,800. So they still see a 27% of a growth potential from Avenue Supermarts, indicating that one quarter just does not define the overall company's results. So it's not fair to undermine its current results based on these Q2 performance. And also, it believes that value-seeking customers will remain the primary purchase driver for a large part in India, and Avenue Supermarts will continue to play a pivotal role here.
Right. Lastly, Nuvama has also reiterated hold rating with a revised target price of 5,040. And what they're saying is that DMart Ready, which has been, auguring growth for the overall company, has come out with a growth of 22%, which is much lower than that of the FY24 growth rate at which it was growing in FY24.
And but if you look on the other side, again, CLSA has an outperform rating, and this is at a target price of 5,350. Here, while they have cut their EPS estimates by 13 to 15%, they see that the private labels now DMart is shifting their focus, and it's moving its pivot towards these private labels, which will support the kind of growth that it is looking for. And with these private labels comes the EPS growth that the company is targeting for, which will support the margins also. Also believes DMart's low-cost model remains unchallenged in the medium-term outlook as well. So that is another positive that we are building in for Avenue Supermarts.
Right. One last case in terms of valuations where it's valued at currently 107 times. So that is something which is, it's an expensive stock. Going forward also, the valuations will go to 86 and 70. But to conclude, it will all depend on how next few quarters DMart takes into consideration the kind of competition which is coming from quick commerce and also their execution of store expansion.
All right. So a lot to unpack there. Valuations always will be one, but remember, this is one set of numbers. Otherwise, their view on Avenue has always been very, very bullish, isn't it?
I mean, they're doing well, but as I think one of those notes stated, that 22% growth by itself is not bad, but now you compare it to quick commerce, and exactly that expression. There is a problem.
The change in behavior of consumption is going to be a problem at the end of the day. I mean, you need one packet of milk and then you're going on an app and you're ordering it, and is that coming at the cost of a DMart? I mean, I'd love to ask Siddharth Khemka's view on it. He's joining us now, Head of Research of Business and Development, Motilal Oswal Financial Services. Siddharth, very good afternoon. Always a pleasure to speak with you. Let's start with Avenue. Is this really a problem for the industry? Is this a problem for Avenue? How are you looking at the numbers?
Yeah, so I think we heard a lot of arguments right now, in-depth coverage that you did, really commendable there. So clearly there is a a case of slower growth, and when you are getting growth abound in other avenues, for example, you have the quick commerce with Zomato listed, and you get to play the Blinkit over there. People will have comparisons, and that is kind of, and if you look at their own historical growth, that has definitely come down. So it's definitely a case where they need to ramp up the DMart Ready as a model where they could see higher growth. One challenge that DMart is facing is that growth is now being dependent on the capex or the number of new stores that they add. So that is again not that efficient in terms of overall business model. But having said that, I think there is a case to look at DMart. Current valuations may be high, but historical averages, it is trading at a discount, almost 10% discount to its own historical average, which gives a good margin of safety. It has a proven business model, and I think it will bounce back in some time. What we are also seeing is H2 is where more of the stores will get launched. So they are planning to add a rough run rate of about 50 new stores on an annual basis, which should take care of the overall growth. So right now, I think lie low, but second half with growth coming back to the overall consumption theme, I think DMart should also start reporting better numbers.
In terms of this whole quick commerce versus grocery format, are you feeling then a little more bullish on a Zomato, Siddharth?
Yeah, definitely. So Zomato is something that we have been very liking a lot. It has been our preferred pick for a while now. Even now, we have a target price of 320 over there. This quarter, we are expecting strong growth from DMart whenever the number comes. So basically, if you look at the Blinkit should continue on its growth momentum. Hypersure will report strong numbers. Overall, we are expecting Zomato revenue growth of 68%, net profit of 145 crores for the quarter. Last full year, they had about 350 odd crores of profit. So going forward, growth. So the core business, food delivery business is stable, but Blinkit, we believe, offers a once in a generation opportunity to participate in a disruption of an industry, which is your retail, grocery, e-commerce, all gets disrupted through this quick commerce medium. And hence, we believe margins will improve going forward. We are estimating a PAT margin of around 4% for this financial year, improving to 8% and then around 13% in FY27. So you'll see a huge spike in growth going forward in Zomato.
Okay. So Zomato in focus, Zomato about 1% up, but the other big story, of course, today is not just BSE but CDSL as well. That entire play is really roaring. CDSL up 7.5%, BSE also doing very well. But let's move on to the brokerage note of the day. JP Morgan is overweight on L&T. In fact, they see a 25% upside, and you're seeing that stock zoom about 2%. Anushi, why is JP Morgan excited about L&T?
Hey Tamanna, so 4,360 is the target price that is given by JP Morgan as they've initiated a overweight trading on this one, seeing a 25% of an upside. Now this is huge coming from, if you are thinking for L&T. Now a couple of reasons that they have cited. First are the valuations which are in a favorable position. That if you are taking the FY26 core EPS into account, the company is trading at a P of about 25 times, and this is with an assumption of a 23% of an EPS growth that the company is seeing over the course of between the course of FY24 to 27. So a good combination of growth as well as reasonable valuation is as to why JP Morgan is bullish on this. But other than that also, if you had noticed in the past few quarters, their margins had been a question mark with a low growth in the margin as the legacy orders were being executed. But now the note has cited that they expect a 60 basis points of a margin expansion over this FY24 to 27 period as well. So that remains on a watch out for as how the EBITDA margins of the companies continue to grow ahead. And the core focus also remains on the capex tailwinds, that is for both the domestic as well as the Middle East industry. If you look at the Middle East side, the company has been receiving significant orders from this side with orders in the range of 10,000 to 15,000 crores. So how the company uses these orders and then translates it into revenue would be another focus area for the company's growth picture forward. So this is why JP Morgan remains bullish on L&T, and we are seeing a 25% of an upside from these current levels.
Okay, so L&T, big upside there. Kunal, just your view on the charts first on L&T before I get to Siddharth for the fundamental view.
So I think if you look at L&T in today's trading session, yes, it has witnessed a breakout on a technical chart. The 200 DMA stands at 3576. So we just touched that mark in today's high. We need to sustain about this level to continue this up move. Overall, the structure looks positive. The stock, the momentum indicators are been in the oversold territory. So clearly a bounce is expected from the current levels. First resistance, what I see for the stock is at 3650. So that would be the first target. And once it surpasses that, we can even head towards 3720. So the outlook is positive from the current levels.
Okay. Well, in which case, before we actually, should we take a break, or maybe we'll just finish up the L&T piece and then take a break? Siddharth Khemka, would you be a buyer in Larsen currently, or would you believe that there are better opportunities because people don't have to match the index?
Yeah, so I think definitely if you are looking at a safer bet within the overall capital goods space, I think L&T offers that opportunity. It is a well-diversified play. The company is definitely looking at opportunities in newer areas such as offshore wind projects, where it has already made foray with order of around $100 million. It is also looking for opportunities in the green hydrogen, nuclear construction. So there are newer segments where L&T is trying to get in, some of the niche players where they have a stronghold. So L&T is not leaving those stones unturned to get into those growth areas. Overall, we believe it has a very strong growth trajectory with the order book. Currently, ROE stands at about 15%, and the company is targeting to reach around 18%. So I would still be a buyer. We have a target price of 4,250 with a buy rating on Larsen.
Okay. Okay, noted. Stay on, gentlemen. We need to take a quick break. On the other side, we get you to the top BTST ideas, try and tell you about stocks which are moving briskly in trade and get in some technical views there as well, and maybe some long-term investment ideas. Stay tuned. We'll be right back. right, back with India market close right here on NDTV Profit. A few stocks which are flying off the shelves in the last few minutes of trade. Uno Minda is one, which has had a bit of a surge in the recent few minutes. So look at that stock, 4% higher, but a bit of a surge, an uptick in the last few minutes of trade. As is a stock, as is Marksans Pharma, which is up quite significantly from the levels that it was trading at. So do watch out for that one as well. Some bit of an uptick for PB Fintech too. So Marksans up 4.5% and a surge. PB Fintech is the other one which has had a bit of a surge. There is also ITDC and Deep Industries. So a bit of pullbacks into some of those. Look at the ITDC, a surge there, 675, 2.5% higher. Deep Industries 2% higher too. But the Uno Minda is interesting for sure. Kunal, any thoughts on Uno Minda in particular? And if not that, then maybe a Marksans Pharma.
Yeah, I think Niraj, Uno Minda definitely looks like a counter at the current levels on the long side. Even 2 to 3 days previous sessions, we had seen some buying from the lower levels. Today also the stock has surpassed its previous day's entire range. So clearly a bullish setup at the current levels. On a short-term perspective, the first target what I see is 1068 on the upside, and post that it can go towards 1100.
Okay, so some key movers there. Movers are stocks which have just been flying around in the last few minutes of trade. Actually, talking of stocks which are moving around on the back of order wins, Varsha Johnson with the list. Varsha, it seems that a clutch of companies are getting some very large orders, and repeatedly so in the last couple of months.
Well, yes, Niraj, I would say it's order wins day to day. So, starting with Ashoka Buildcon, wherein they've received letter of acceptance from Maharashtra State Road Development Corporation. The contract is under EPC. Total bid price stands at around 2,310 crore, and these projects need to be completed within 36 months. If you see the order book as on June 24 stands at around 10,300 crore. Then we have Hindustan Construction, wherein they've received LOA from Maharashtra government for construction of 2-lane bridge for around 1,000 crore. Now this needs to be executed within 36 months. Order backlog as on June 24 stands at around 9,500 crore. Then we have Vascon Engineers, wherein they've received 57 crore orders from Maharashtra government, and this has been awarded on percentage rate basis. This needs to be completed within 28 months. Total order book stands at around 3,400 crore. Then we have PNC Infratech, wherein they received LOA from CITCO for road project for rupees 2,040 crore. Now, please do know that on Thursday they were the L1 bidder for the same project. The difference is the negotiated price, which has reduced from 2,090 crore to 2,040 crore. An order book as on June 24 stands at around 19,000 crore. Lastly, we have Bondada Engineering, wherein they've received LOA of rupees 390 crore from Maharashtra State Power Generation. Order book as on Jan 24 stands at around 1,695 crore, with majority for EPC contracts.
Okay, so whole host of companies moving on. Contract news, VA Tech, Wabag. Let's just pull that up. Also buzzing in trade, and suddenly seeing a fair bit of a spike coming in. Look at that, 8% up in the last few minutes. I'm not sure if there's any news coming in on it, but yeah, that's one stock that has really been moving. Siddharth Khemka, Kunal Shah with us. Siddharth, I want to talk to you though about HCL Tech, and I want to talk to you about IT companies. TCS was not the most, I would say, exciting set of numbers, but better expectations from HCL Tech and the entire pack for you this quarter?
Yeah, Tamanna. So I think TCS definitely did delivered a little less than the expectations. But I think the overall Q2 for the technology space, we are expecting it to be decent. But again, on an aggregate basis, could disappoint the elevated expectations. What we see is that the Q2 sequential growth for the Q1 for the tier 1 companies could be a bit better, about 3 to 5%, and for the tier 2 players it could be even higher, about 5 to 6% growth. But if you look at some of the pockets of growth has been, for example, the US banking space has seen some growth in terms of discretionary spending, but there are still pockets where growth has been sluggish. So the near term headwinds continues to impact impact the IT players. December quarter will be another quarter of weak quarter with furloughs as well as wage hikes. The Jan to March quarter, which is Q1 for the US, will be the quarter of most importance because that will be the time where the budgets for the full year spending will be announced, and by that time, hopefully, Fed would have taken another rate cut and giving more leeway for corporates to do rate cuts. Coming back to HCL Tech, we think the numbers could be much better in terms of the overall delivery. The company could maintain its guidance. And given its broad-based growth across verticals and geographies, we are expecting HCL Tech margins to increase by about 30 basis points. As I said, expect HCL Tech to retain its growth guidance of about 3 to 5%. On the other side, Infosys is where we are expecting the growth guidance to be upgraded.
Okay, so what would be your top 3 picks, Siddharth, for IT, for the IT space?
Clearly, if you look at from the tier 1 space, what we are liking is HCL Tech, TCS, given its diversified order book and market leadership in terms of execution, and finally Infosys, where we are expecting growth to pick up. Within the tier 2 players, our top picks is the Persistent Systems and Coforge, where we are expecting both to report strong performance. Persistent clearly stands out for its focus in high growth sectors like healthcare as well as BFS. Coforge is likely to realize its cost synergies sooner than expected due to the Signity integration.
Kunal, what about you? What are you liking the best in IT, and would you veer towards the frontline companies?
Yeah, I think on the IT space, Tech Mahindra is looking very good on the chart perspective. The stock, in fact, in today's trading session has given a good breakout after a good series of consolidation on what it had. So I think here more some upside is left in the stock. The stock might touch its all-time high level, which is 1830 on the higher end. So 1690 is currently where it is trading. Even at current levels of whatever 1 to 2% dip, if you get, utilize that to buy. I'm looking for immediate targets of 1745 and 1780 on the upside.
Okay. So that's Tech Mahindra in focus for Kunal in the IT space. But let's talk a bit about India's renewable energy sector catching up pace at a lightning speed. Mihika has this interesting report for you next. We at NDTV Profit have looked at the top 5 stocks you should consider if you want to play the solar theme. Yes, Mihika?
Yeah, good afternoon. So up first on my list is actually Tata Power, 3.7 gigawatts of operational solar capacity. Their solar EPC order book as of Q1 actually stands at over 13,000 crores, as well as their third-party solar rooftop order book at the end of Q1 FY25 was also healthy. The company also produces its own solar modules and cells and has its own facility, so it helps in terms of costing for the company. Next up is Adani Green Energy. Solar is 66% of the company's current 11.2 gigawatt renewable energy portfolio, and this capacity could grow to 35.5 gigawatts by 2030. The company has also built the world's largest single location solar project. Then we have NHPC, a total of 1.378 gigawatts of solar projects under construction, 1.5 gigawatts of solar projects under tender and pipeline stages. And NHPC has also said that they're exploring solar projects in various states like Andhra Pradesh, Odisha, Jharkhand, Madhya Pradesh, Gujarat, and this could have a total indicative capacity of 20 gigawatts. Then we have NTPC, which is focusing on integrated solar and storage solutions as well as a part of their renewable energy strategy, and they're developing a 50 megawatt solar power project in Sri Lanka, so an international presence itself. And lastly, it's the whole solar module manufacturing plant, and companies are looking to increase their solar module and cell capacity. This includes companies like Adani Enterprises, Mundra Solar, Premier Energies, Reliance Industries, and Tata Power. In the non-listed space as well, we have 2 IPOs that are coming up, which are a good play on this theme as well. That includes Wari Energies and Vikram Solar. Now, solar module capacity is expected to rise to 150 gigawatts by FY28 as per Frost & Sullivan analysis versus 72 gigawatts in FY24, and the solar cell capacity is also expected to rise to 60 gigawatts by FY28 versus 8.1 gigawatts in FY24. So the growth in this space could also help in terms of economies of scale in India itself, and could also reduce our reliance on imports of solar as well.
Okay. All right, that's an interesting piece. How do you play the solar power, the solar energy push they're coming in from Mihika? I want to come to you, Kunal, but on two of the stocks that we've been talking on the show. Let's talk about CDSL, let's talk about BSE. BSE, like Niraj also highlighted at the start of India market close, is on one-way, runaway kind of a train. Are you seeing a further upside there?
Yeah, I think if you look at it has been a one-way rally for the stock. Definitely, if you look on the technical charts, it is still trading in a heart of high bottom formation. The stock has today given a fresh breakout, so the immediate target what I see on the upside is 4960 on the higher end. And I think that is where even if I look at the monthly RSI, that is the relative strength index, it has also got into an overbought territory. So probably from the current level, 100, 150 points upside, which is what I see in the stock. Probably that would be a good time to book profits in BSE.
Okay, so that now, you know, BSE has caught up in terms of price performance with its larger peer like nobody's business. It trailed NSE for such a long time while NSE traded in the private markets between 66,000, 6,200, 400. Now BSE is at 4,800 over the last 1 year, 223% uptick, and a majority of that in the recent past. Now, is this frenzy? Is this genuine future earnings being discounted? And therefore, somebody who's invested at lower level, Siddharth, fundamentally, should she get off the table and book profits, or should she stay invested?
So, Niraj, is a difficult question to answer right now because there are still changes happening with the latest regulation from SEBI that each exchange would be allowed just one derivatives weekly expiry. I think that brings a lot of space for growth to BSE. We knew that earlier it was kind of a almost monopoly from NSE on the derivatives front, but post the weekly expiry launch by BSE, they had gained a market share of about 20% in the derivative segment. With this change, whenever that happens in the end of November, I think December, Jan, Feb, they could potentially reach about 30, 35, 40% of market share. That purely depends on the traders' mentality or the how adaptable they are to trade a Sensex to compare to a Nifty on a weekly expiry basis. But that definitely gives a lot of room for growth to BSE. Nonetheless, they also have their other core businesses. For example, the continued momentum in the Star MF platform, growth in the cash segment, the possibility of starting the power exchange business. So there are other growth avenues. So I would suggest holding on to the stock. I would only be able to tell you that if at all you want to get off during the Jan, Feb, March, where they finally are able to stabilize their market share gains in the derivative segment. I think right now it's just frenzy that would continue for the near term.
Okay. So BSE looks exciting, but remember, it's result season and that's going to be the big focus for the markets. RIL set to report its earnings later today. Mihika joins in to tell us what the street is expecting.
Yeah, a weaker expectation in terms of financial results on consolidated and sequential basis. Analysts expect the consolidated EBITDA to fall for Reliance Industries in Q2. As per Bloomberg estimates, while revenues may rise 2.2% quarter on quarter, EBITDA will could fall 5.4% on a quarter on quarter basis to over 40,438 crores. Margins may contract 120 basis points due to this to 17.2% versus 18.4% a quarter ago. When you talk about the expected segment-wise performance, well, standalone business, which includes the OTC and upstream oil and gas company, and contributed around 53% of the consolidated EBITDA in FY24. Well, O2C EBITDA is expected to fall 26 to 27% on a year-on-year basis, as per Motilal Oswal as well as Nuvama, and this could be due to the weak refining segment, where the benchmark Singapore gross refining margins fell 62% year-on-year during the quarter. When we talk about the retail segment, well, Prabhudas Leeladhar expects profitability to be resilient, and Nuvama expects the EBITDA of this segment to grow 7% year-on-year year due to a 10% rise in retail area. Lastly is the Geo. Well, the segment is expected to post strong and a steady quarter and will benefit from the tariff hikes that were announced by the company during the quarter. Nuvama expects the EBITDA to rise 12% on an annual and 6% on a sequential basis, and growth will be mainly driven by a higher average revenue per user, which the brokers expects to see a 5% uptick in.
Okay. Of course, watch out for Reliance Industries too. Remember, energy per se is not anticipated to come out with a very strong quarter. So that's to be borne in mind. But be that as it may, it's something that you certainly want to keep an eye out for, Reliance Industries. It's almost time before we take in the closing strategies. But before we do that, I wonder if other liquor companies are giving company to Allied Blenders or no, because Allied Blenders has zoomed in trade, 5% higher for this one. I wonder if Piccadilly Agro or Tilaknagar Industries or some of the others are also reaching the highs of the day. Tilaknagar Industries flattish, but 1.26%. Not bad, but nothing great either. Bring up the Piccadilly Agro and some of the others too, just to see what's happening there. No, not really. So Allied Blenders is going on its own tune. Siddharth, I know you guys have coverage on the liquor space. What do you like within this bucket?
I think we don't have that much depth coverage because a lot of these companies are in the mid and small cap space. What we have to coverage on United Spirits, and that is a stock that we continue to like given the increasing share from the premium segment. The company has done well. Some of the other names that you were talking about, I think some of these companies have launched the Indian branded single malt spirits, which have kind of done well, not only in India, but in the global arena where they have been accepted well. So that is one reason why these stocks are doing well. The other reason is a lot of these companies do participate in the ethanol story as a byproduct, where the government has been increasing the blending rate as well as the price at which ethanol is being procured. So that also gives a leg up to some of these spirit companies. But again, going back, clearly the improvement in metrics by United Spirits is something that we like. We believe growth will continue, and the Indian spirits consumption continues to moderately grow, in which market leadership by United Spirits is the key factor.
Okay, 3:20. Let's get in closing strategies. Kunal, what is your top closing strategy for the day today?
Yes, definitely the top closing idea over here will be ABFRL. The stock in today's trading session had given a fresh breakout with volumes. I expect this momentum to continue in tomorrow's trading session as well. So ABFR is a buy at the current levels, keeping a stop loss of 342 and looking for targets of 354 to 360 on the upside.
Siddharth, what would be your big idea that you're looking at, and what are you expecting from Reliance?
Yeah, sure, Tamanna. So one idea, I think you are discussing the renewable space. Within that, what we are liking is a Tata Power. We are seeing that Tata Power is undergoing through a multi-year transformation, with 45% of its capex being allocated towards renewable energy projects. This is definitely helping the company increase the share of core earnings over the period and drive the around 14-15% PAT CAGR. What we are also seeing is that for the Q2, revenue growth could be about 21%, again driven by the expanding operations in renewables as well as infrastructure projects. The company's solar module facility of 4 gigawatt. There is T&D projects about 46 billion rupees, and the growing EV charging networks is something that is driving growth. So we like Tata Power. We have a buy rating with a target price of 530 there. It's a good play not only on the increasing energy demand in India, but also a good play on the renewable space. Coming to the Reliance Industries, I think results will be soft. The consolidated EBITDA is expected to grow just 2% on a Y-on-Y basis to roughly about 400 billion rupees. We are expecting the standalone business EBITDA to be down about 26% on a Y-on-Y basis, while Reliance Jio, the telecom business EBITDA could be up by about 19%, and for the retail business, it could be about up about 10%. So the core business, the oil to chemical business, that is where bulk of the pressure is being seen for Reliance. So another soft quarter from Reliance is expected.
So another soft quarter expected from Reliance. Kunal, what is Reliance looking like in the charts? It's had a pretty tough couple of weeks.
Yes, definitely on the chart also it looks weak before the results. There has been hurdle for the stock at 2800. So even if you look at the option data, if I add on to this, 2800 call writers are quite active at those levels. Even in today's trading session, they have added fresh short positions as well. So till the time these levels are not taken out, the view will be bearish. If the downtick or the down move continues, the first support what I see for the stock on the downside, it is placed at 2600. So 2600 is where I see the first support for the stock. Probably from there we might see some bounce.
Okay. Well, so that leaves you with some ideas and some names for tomorrow for sure. Is there something else that should stand out really in terms of movers? Not really. Nothing in the last few minutes. Niraj though, at 769 or 770 is packing a bit of punch. So do keep an eye out for that stock. 2.5% higher for that one. A couple of these movers, Kunal, Allied Blenders, Anantraj.
Yeah, I think Anantraj is something which has seen a very good rally. In fact, in today's trading session, we have seen the stock has surpassed its previous swing high as well, and it is sustaining above that. So probably this could have a short-term good move on the upside, where I see 781 to 788 that could be achieved in the near term.
Okay, well, 6-7% or thereabouts, so good move there. Polycab is ahead of the numbers, doing okay now after being in the dip. So twice in the last two sessions, Polycab, listless move, but has come off from the lows of the day. Watch out for that one. Exide has come off the lows of the day. This was the big mover on Friday and lying low today, but off the lows of the day again is Exide and almost breaking into the green. Siddharth Khemka, do you guys have coverage on the battery manufacturers? Any thoughts on Exide? If not Exide, anything else?
Yeah, Niraj, so we do have coverage on both Exide as well as Amar Raja battery. Among the two, what we like is an Exide where the growth is improving over the next 2 years. So this year, both the companies are expected to report about 10% growth, but next year we are expecting Exide to report a much better 22% growth. And that is something that the company should do well, both OEM as well as the secondary market sales. Both the companies have taken partnerships and formed joint ventures in the EV battery space, and that is something that makes it an interesting play, transitioning from the legacy car batteries to the EV batteries. And that is where again the partnership will help Exide improve growth as the plant is getting ready and the growth will come about. So between the two, we like Exide purely in terms of core business as well as the foray into the EV battery space.
Okay, so EV battery space is why Exide is looking interesting. I'm trying to understand, Siddharth, if you're excited about what's happening with Realty. I mean, Oberoi Realty is the big buzzer here, but the entire Realty index also looking very, very positive after a while. Oberoi Realty, do you think would be in your top 3 or 4 picks in this space?
So yeah, Tamanna, I think the space definitely looks interesting. Some of the newer launches is what is making the space even more exciting after a brief period of lull. I think the interest rate cut cycle, which will start in India maybe 2-3 months down the line, that will make the space even more interesting, because so far what we have seen is the high demand for the premium or the ultra luxury space. With the interest rate cycle on the downside, the mid-mass segment would also start participating, and that is where a lot of these players definitely have a space. For example, Godrej Properties, which is our preferred pick within the overall real estate pack, has a large presence in the mass market space or the mid-market space where they have a national presence. Oberoi also has lined up a couple of new launches, which makes it interesting. So that can be also in momentum in the near term.
Oberoi Realty looking interesting. Kunal, any views on Oberoi Realty, which is running up today, and anything else in the real estate space that you're liking?
So I think at the current levels, what I see interesting over here is the DLF. Again, in the last 2 to 3 trading sessions, the stock has been taking support at its 100 DMA. It has an immediate resistance which is placed at 875. Once that is taken out, then we will see a good move in DLF, at least to the levels of 910. So probably an early entry if you get at the current levels. But the risk to reward ratio is favorable. On the downside, 840 should be kept as a stop loss.
Okay, gentlemen, we'll leave it at that. Thanks so much for taking the time out and being with us. And let's start wrapping up the markets. About a minute and a half left. Ample time to capture today's action. And one word for today's action has to be that it was a day which broke off the shackles of Thursday and Friday, because no, literally we were just kind of clamped down. And the bank Nifty helping the index today, 1.3%. This is ending at the high point of the day, by the way. This is a really strong move for the banking index. For the longest time lying somber, but in today's session it's really broken out and doing well. And frankly, just before Tamanna takes over for the mid caps and the small caps, if you just look at the heat map, I think it will show you a few banks right up there. HDFC Bank 2.3%, Tamanna, ending at the high point of the day. But there is IndusInd Bank, Kotak Bank giving company, and IT is not doing too bad with Wipro, Tech Mahindra and Infi in the top 10. Okay, Infi just slips, but otherwise in the top 10.
Yeah. What's standing out for me on BFSI though is this one, Bajaj Finance. Bajaj Finance having a fair bit of a weekday. Bajaj Housing Finance also is important. Finserv, of course, also following suit. But just pull up Bajaj Housing Finance for a second. Their anchor book lock-in ended today, and that stock is down nearly 6%. So that is one of the, I would say, exceptions to the entire BFSI space. But it's all about HDFC Bank today. HDFC Bank is that big winner, as Niraj talked about. Small caps and mid caps not really following on with that same momentum that you're seeing on the Sensex and the Nifty. The mid cap 150 is okay, all right, less than 0.5% down. This is also nearly flat, so not too much action over there. I just want to pull up advanced decline ratio once more and see if that's changed significantly in at the last hour or so. And there you have the bears taking over pretty much neck to neck on that. Yeah, slightly, yeah. Just at the end over there, you have bears taking over. So neck to neck there. BSE 500, very quickly. What's gained, what's lost? Stock specific. I mean, Avenue Super is the big hit of the day. I mean, I don't know. We asked a whole host of guesses. No one really stuck their neck out today, Niraj, and say buy Avenue. Despite everyone saying great company, but that pain point continues. Bandhan Bank coming off after a good week last week. Tata Chemicals also hurt quite badly. On the upside, Federal Bank is doing well. Aptus has been roaring. I'm not too sure why. I just want to see where BSE ended at the end of it after being about 6.5–7% up. Where did the Bombay Stock Exchange stock end? If you can just quickly pull that up before we wrap up for the day. Yeah, 7% up on BSE. So this one's just not quitting. But truly, that's all the time we have for the show. From Niraj, me and the team that put it together, thank you so much for watching. Join us back tomorrow morning.
Thanks so much for tuning into Profit Insights. Consumption has become a big talk point, especially because we are entering the busy season. But not just that. The idea is to try and talk about the emerging trends, or trends which have already emerged maybe, but have a very long duration. And while to the minds of the skeptic, it may seem that some of these have already run their course, to the mind of the optimist, maybe there is a long runway left. And I think that is what I'm gonna try and probe today with somebody who looks at this space amongst others very, very closely. Rohit Chodia, he's Director Investments at White Oak Capital and joins us right now in our studios to talk about that. Rohit, great having you. Thanks so much for taking the time out.
Thank you, Niraj, for having me.
The pleasure is entirely ours. So,
absolutely.
I'm told that you look at all things consumption amongst others.
I do.
I want to try and talk about 2 or 3 aspects of consumption. The first one is, let's say, quick commerce, because ever since Swiggy's balance sheet has been released, or the papers have been released, people have started comparing what's happening in that space, what is Zomato doing versus Swiggy doing, and of course, what are the investing implications for this from a really long-term perspective. Now, my starting question is, are we looking at a space that has done a little bit, but the larger runway of growth is still ahead of us?
I think that would be true of all things consumption in India. There is a long runway ahead for pretty much everything. So I have a very strong belief, and I think we at White Oak share this belief, that Indians will consume more and consume better of pretty much everything, as long as, of course, GDP growth, etc., the macros remain favorable. This is going to be the long-term trend, right? So we are only at the cusp of the beginning of the consumption journey. Yeah, that's point number 1. Number 2, as consumption grows, the business models around consumption will also evolve. The quick commerce space that you spoke about is really on the retail side. So even on the retail side, if you were to look at it, right, and compare India to a lot of other markets, whether developed or other developing markets, right, the development of modern trade, e-commerce, we are still a few years behind a lot of other markets. So as these new business models emerge, and quick commerce is going to be one of those, and quick commerce specifically solves a few India-specific problems, which is why you've seen the rapid takeoff. So proof of concept now is delivered. Question on how long is the runway going to be? Probably decades.
Probably decades.
Probably decades, yeah.
Very interesting.
We're probably at the tip of the iceberg here.
How does this typically work out? So if we are at the tip of the iceberg, and some people would argue that the J curve has already been seen. So maybe food delivery or rather dine out might be moderating a little bit to some people's minds. But then suddenly there is food delivery, and then ancillaries crop up as well. So how do to your mind these businesses, let's say I'm using examples of Zomato and Swiggy. I'm not trying to nail down a particular company or some of the others. How does the business model evolve to your mind, let's say over the course of the next few years, since we can't talk about decades really?
Yeah. So let's take a step back, right? And you use the words skeptics and optimists, right? So even I was a skeptic. I would like to call myself an open-minded skeptic till a couple of years back on whether quick commerce would succeed or not as a business model. There is no question, or there was no question in my mind even then, on whether this is a use case, right, that is needed by the consumers. Right? And as I was saying, it does solve a few India-specific problems. I mean, the sheer population density that we have, traffic density, right? So while your nearest DMart or a Reliance retail store could probably be 1.5-2 kilometers away, it is probably half an hour of effort to go to the store and come back to your house. Yeah, quick commerce solves that problem. Right? India has a lot of, in addition to stock up at the beginning of the month, you have a lot of top up spending through the month on grocery and other items. Right? That's again a very, very, very unique Indian phenomena in terms of the degree of top up as a percentage of overall basket. Right? Again, quick commerce solves for that. Your last minute requirements, etc., etc. Now, what changed my mind on quick commerce? Right? What changed my mind really was sitting at one of these dark stores in Ahmedabad a couple of years back through the day. I just wanted to see the thing in operation. And it opened my eyes to the kind of use cases I had not thought about.
For example?
I don't want to, maybe if you want to get into examples, the first thing I saw when I entered the store, and this is Ahmedabad we are talking about, right? You eat a lot of farsan and all there. So these 15 kg tins of edible oil. of edible oil. Not something I would have expected to see in a quick commerce store, because in my mind, this was really, serving a customers or a household's top-up needs.
Right.
Right? And I reached the store at 8:30 in the morning, and the first order I saw, come in was for a contraceptive. 8:30 in the morning. Right? So there was these unique business cases or, use cases from a customer perspective that I saw. I saw an order for just a single pack of Lay's. Now this, of course, must be a cranky kid at home, with maybe only one parent around, busy, etc. She didn't have the time to go down. So she actually paid 30 rupees delivery charge to get a 20 rupee pack of Lay's. I saw many such use cases. That opened up my mind. The second one was really a personal experience where, my kid, he was in, I think, 8th grade at that point in time, needed a lab coat for the next morning. And he totally forgot about it and asked me to get one at 10:30 in the night. Check Blinkit, it was there. Right, so that really opened, in some sense, the world of use cases that this model was going to serve. And being an open-minded skeptic, started working more on the theme and saw a business case evolving. Yeah.
Okay, so what is this business case now going ahead? Let's say the next few years. What's the kind of growth that you envisage? Is this a winner-takes-all market, or the top 2 or 3 players getting the lion's share? And do we have those established already, or could newer entrants come and challenge it?
There is 2 or 3 questions there. One is, what could be the growth rate now? Very, very difficult to say. So even the best of crystal balls would not be able to do justice to this question, but let me give it a shot. We are talking about a broader TAM. If I were to look at grocery plus, there are certain other use cases that have emerged, whether it is electronics, toys, games, etc. That quick commerce guys have started serving, right? We are probably talking about somewhere between a $700 to $900 billion overall spending on categories that quick commerce companies now stock, essentially, right? This is of a total, if you were to look at total consumer spending, that's upwards of $2 trillion, right? That's your private final consumption expenditure. So we are talking about a $700 to $900 billion overall, sizes of the categories that these guys are now serving. Now you'll have to then start taking cuts to this, right? This model needs a certain level of population density, requires a certain, density of SECA population class, maybe B+, right, which it appeals to and serves well. If you were to do all those cuts, take the city cut, which, offers that population density, take the population cut from, by SEC classes, etc., you're probably looking at maybe a 10th of the market being serviceable today. Now that's your serviceable addressable market. You can apply then another cut to it, which is profitable serviceable addressable market, right? Your dark stores have to be viable as independent units. That's really the core of retail.
Right.
Core of retail is your model has to be profitable at a store level.
Yeah.
Now, how many such dark stores can be there? We already have, a Blinkit which has crossed 600 stores. Swiggy is close to 560. Instamart. Zepto probably somewhere between 350, 400 at this point in time. So you probably Big Basket, add, a couple of others who've tried Flipkart, Minutes and all. We are talking 2,000 stores, right? Now this number can be materially higher. You have Blinkit's own guidance at 2,000 stores in the next couple of years. I think others have similarly aggressive plans as well. As use cases emerge, now, how will this market grow? You will have new households adopting, or warming up to quick commerce as a service, because the utility is there for a lot of households. And then once it becomes a habit, you also get higher frequency of orders from households who are already using the service.
Sure.
This is how the market will expand, and we have seen improvement in both these metrics. New households coming in, as well as frequency going up for the last few quarters. It has actually been a J-curve, right? As things stand today, I think last year, all these players put together did about $4 billion in GMV. Yeah, this year, probably we could see all these players combined hit $7 to $8 billion. Now, if I talk about the overall TAM that I spoke about, we are probably looking at maybe 1% share of this $800 billion TAM, but more cuts that needed to be applied, you're still high single digit maybe. And this number can keep growing.
So you effectively saying that it may not, we don't know, but it wouldn't surprise you if we actually see between a 50 to 100% CAGR for the next 5-7 years.
Tough to say, lower end of that probably, because we are talking 7 years. over a 7-year period, there is a huge difference between.
Yeah, what is there right now? Okay. But still, between a 25 to 50% CAGR won't surprise you.
Wouldn't surprise me.
Won't surprise
me. In fact, next couple of years should be even better.
Okay. Are the established players the ones which will take the lion's share of this growth, or could newer entrants come in, because they will also need to be deep pocketed? Yeah. So I'm guessing even anybody who thinks of this will also be a deep pocketed player. Are the players established?
So what we are really talking about is, are there barriers to entry in this industry?
Right.
Are there barriers to scale in this industry? Are there barriers to thrive in this industry? So, I mean, often we talk only about entry barriers, right?
Yeah.
Certain industries, certain sectors, it's easy to enter, difficult to scale. Certain sectors, it is easy to enter and scale if you have capital.
Yeah.
But then it is very difficult to thrive. Right? Another example from the retail universe that I can think about is QSRs. Very easy to enter, doesn't take a lot of money. Right? Easy to scale as well if you have capital. But how many players have succeeded?
Exactly.
It's very difficult to thrive. So if you have to apply the barriers to thrive, I think that is where things will become difficult for new entrants. And you have some deep-pocketed, players in the industry. I don't want to name them, who've already either entered in a small way or are thinking of entering because their business models are getting challenged. Think of horizontal e-commerce companies. Think about modern retail. There is some delta or impact on growth rate even there. Right? So some of these players will enter this space. Now, what makes this business, in my view, difficult to thrive in? Because there is a huge learning curve involved here. No amount of capital can, sort of shortchange or give you a shortcut to that learning curve.
Got it.
Right?
Okay.
And that is the biggest moat, if I can use that term, that some of the incumbents have.
Okay.
Right? Whether it is learning curve on the tech side, whether it is learning curve on understanding the consumer, and you have to remember that you try and understand consumers at a hyper-local level in this business. So it's at a pin code level that you start understanding the consumer dynamics.
Yeah. And the fact that AI and data helps you.
Yeah. Even in a Mumbai, what sells in Borivali could be completely different from what sells in Kolaba.
Most certainly.
And that learning over time accumulates, and that is difficult to replicate.
Got it. So last question on this before we move to retail is that when you are making an investment case, you are building out a hypothesis. You hope that it will work out as well. So in your investment hypothesis, I heard you say at the start that it's decades of growth ahead of us. Maybe it's hyper in the next 4, 5 years, 6 years, then maybe cools off a little bit as well. But would you reckon that outsized investment returns in some of the well-managed quick commerce companies over the course of the next few years is a distinct possibility?
I would think so. It's, returns are not just a function of how fast an industry grows. It depends on a lot of other factors. Your starting valuations.
Yeah.
Right? How does profitability shape up? How do the ROC characteristics?
So I want an easy answer here. The starting valuations
to
now.
Your question,
there is a Swiggy IPO, there is a Zomato out there, there is Zepto private markets valuations. So from here on, do you reckon that investor returns?
Since you asked me whether it is a possibility.
Possibility.
Yes, it is.
Okay, but a decent possibility.
There is a decent possibility because, it's not just businesses evolve. So, our assessment of businesses sometimes is limited by what we see and the limitations of our own imagination.
Yeah.
Right? These businesses evolve. So,
most certainly. I get your point. By the way, viewers, keep in mind, nothing out here, any chance we will not discuss stocks, but nothing out here will be an investment recommendation. More a fleshing out of a thought process that Rohit has. Rohit, so lovely talking about this first aspect. I would like to dovetail a little bit into the other aspect of consumption, which is retail, because there is a connection out here. Now, fascinating developments in retail in the recent past. If Trent has done to the shopping experience what it did, just this week we've also learned about they also venturing into lab-grown diamonds. And I don't want to make this a Trent conversation, but I'm saying that modern retail is evolving into categories that we didn't think were possible some time ago and creating giant businesses out of them. How do you look at retail currently when you look at it from an investability perspective?
Sure. And since you mentioned Trent, I am making an assumption that your question is specific to physical retail.
For now, let's start with that.
Yeah. So the obituary of physical retail has been written many a times in the last at least 20 years, right? And it has been partly true. You've had a large number of businesses fail in this space. If you look at the US, right, a lot of these phrases like ghost malls and all, have entered the lexicon in the last couple of decades, right? So partly true. But then at the same time, there are retailers who have thrived, physical retailers who have thrived. They've reinvented themselves and have thrived. Now, what are the vectors on which you can thrive in physical retail, right? You have to offer the consumer who has the choice of shopping on an Amazon or a similar, e-commerce platform. You have to give that consumer a strong reason to come to your store and shop, right? That's really what your job is as a physical retail player, right? Now, what could these reasons be for the consumers to come and shop, right? And I've thought through this, I and the team at White Oak, we've thought about this a lot. And we have sort of, seen that retailers who have done well, physical retailers in the last couple of decades, despite the threat of e-commerce, a very real threat, right, is retailers who have offered the consumers either superlative experience or superlative value. If you're caught somewhere in the middle, and there is an author consultant called Steve Dennis, he calls it the boring middle. The boring middle. So you can't be in the boring middle and thrive or even survive in the long run. So as a retailer, the spot you need to not be in or avoid is the boring middle. Either differentiate on experience. Think of Tanishq, right? Superlative experience in the sector that it operates in. As a jewelry player, right, Tanishq really differentiates, among other things, on experience. Or think of a DMart, which is on the value axis, right? Ultimately, you have to deliver a wow on one of these two. What DMart delivers is a positive sticker shock. You look at the price and you go, wow.
True.
What a Tanishq delivers is a positive experience, right? A differentiated positive experience. So if you stand for one of these two, the second aspect is retail is also about making a lot of choices in terms of what your business model is going to be, what are you going to sell, to whom are you going to sell. The more sure you are of each of these aspects, and you keep becoming better than your competition on the choices that you've made. And you mentioned Trent. Trent is a classic case study on being very clear about what they do, and at the same time being very clear about what they do not do. And they've kept on getting better at what they do. And that shows up in the way Trent has outperformed its peers. Yeah.
Interesting. So, do you reckon that companies, by and large, which have chosen either end and successfully kept on expanding their moat or the entry barrier or their expertise into that, have a larger chance at longevity? Because in physical retail, yes, the obituary for the format may not have turned out to be true, but individual obituaries have turned out to be true, and companies which were once thought to be infallible have fallen by the wayside. So what is the learning here? How does one bet on companies, or how does one build a hypothesis that this is a business that is likely to survive the test of time? Of course, if it doesn't, then you change, which is fine. But right now, when you think of a business, how do you decide what are the determining factors, and are starting valuations a concern? Because again, I'm just using this as an example, but every single point of time people have called out Trent valuations as being expensive. The stock has delivered phenomenal returns over the next few, right? So I'm just trying to understand, how do you approach this space therefore?
Sure, I'll probably start with a quote I read some time back and has stuck with me. This was a German philosopher, I forget the name. He said, talent hits a target that no one else can hit. But genius hits a target that no one else can see. Yeah? So what your job as an investor really, right? If you can separate geniuses from talents and talents from non-talents, right? Even this latter, which is just to identify talent, right, will stand you good as an investor in terms of finding attractive investment opportunities. But if you can find that, those one or two geniuses that will emerge, right? And while it's not a winner-take-all market, right, the geniuses do end up creating disproportionate value. It's easier said than done. There is no, let's say, set of characteristics necessarily. I think it differs by subsectors that you're assessing, or the company that you're evaluating is present in, right? So what Trent has done in apparel, the sort of choices they've made, right? being laser focused on what they do and what they do not do, as I said, right? May or may not apply in some other subsector within retail itself, right? So a trend may not succeed as a QSR player, just saying that, right? Hypothetically, yeah. So you need to be clear on what you think are sort of the factors that will determine winners in the space that a particular company has chosen. And this, again, as I said, will be an evolving list. Right? As businesses evolve, consumers also evolve, competition also evolves. So what geniuses do well, right, is they lead this evolution. They shape the curves. Right? Talent can follow the curve very well, do well. Geniuses actually shape curves. In whether you're talking about FMCG companies, they'll shape their
for
categories.
that matter, any company, right?
For any company.
Any business.
In any business, right?
Right.
So what you're looking for is some of those characteristics, and it is a lot of soft factors. Most important is, I think you have to look at the choices being made.
Yeah.
If you see any confusion there in terms of what to do, what not to do, generally not a good idea to think of that company as a long-term winner. Clarity of business model, clarity of choices, and retail is a business of, a number of choices that you need to make. Right from, it's a business of detail, right? So right from what store format, store sizes, what are you going to stock, who are you serving, what are your price points going to be, sharp,
lot of stuff.
not so sharp. So it's a business of detail.
Okay.
There are a million ways to die in retail, and companies that can avoid all of those million ways have a chance at succeeding.
But that's difficult. So now we have 1.5 minutes left on the show.
Sure.
What I want to understand is, do you believe that the genius that you may have identified, if the starting valuations are a hindrance, it might still be okay to bet? Because like I said, I mean, a lot of these genius companies, and let's say a retail investor watching this right now would look at it and say that, okay, this company seems to have done okay. But I hear every time on television that it's an expensive one.
Yeah.
How does one approach that? We have 60 seconds.
So a couple of things. One is, clarity on what metric you're evaluating these companies on.
What
so
would
you
the
need
right
to,
metric
you need
be?
to, one, you need to have a long-term view.
Second,
you need to think of the cash flow characteristics of the business as opposed to the more popularly used, valuation metrics like PE, EV, EBITDA, etc. So once you take that cash flow centric view, once you have a long enough time horizon, right, and think of where a particular business could be 5 years out, 10 years out, as opposed to, just focusing on the next 1 or 2 years, I think you'll be fine.
Got it.
Even navigating this valuation challenge, which what you're saying is absolutely right. It's a challenge.
Got it. Rohit, fabulous. But this leaves me wanting for more, so we should try and do this more often. But thank you so much for joining us today and giving us your
Thank you,
thoughts.
Niraj. Thanks for having me. It was a pleasure.
The pleasure was ours, and viewers, thanks for tuning in to this leg of Profit Insights.
Nifty Sensex at 1 week high. Most sectoral indices end in the green. Media drags the most while realty ends over 1.5% higher. One of India's largest IPOs, Hyundai Motors India, opens for record 27,870 crore rupees subscription tomorrow. This makes it the world's second biggest IPO in 2024 yet. Government panel meets on GST compensation. Cess looks at extending cess as a levy or a tax. Also considers recategorizing luxury goods under the 28% GST bracket. It's an NDTV Profit exclusive. Flight operations disrupted at Mumbai airport following bomb threats on 3 flights, 1 on Air India and 2 on Indigo. Incidents prompt diversions and security checks. Bonanza for those commuting to Mumbai. Tolls scrapped at 5 entry points for light vehicles. Effective midnight. Decision comes ahead of state elections. 3 suspects arrested in Baba Siddiqui's murder case as Mumbai police investigates the plot behind the former minister's shooting. In an exclusive interview after 12 years, Niraj shares anecdotes and insights into her connection to Ratan Tata. Listen to the full interview at 7:30 this evening. Good evening and welcome. You are watching NDTV Profit and this is Profit 360. I'm Nupur Talwar Suri. Well, we begin with a look at how the markets have rebounded today from Friday's session of losses. Now, the Nifty and the Sensex ended at a 1 week high. Most sectoral indices, in fact, ended in the green, with media dragging the most and realty ending over 1.5% higher. Niraj Shah joins in with a quick look at what happened on the bourses.
It was a good day to the market, you have to admit, because after sluggish moves both Thursday and Friday, wedged in a narrow range, we kind of broke out a little bit. I mean, we're still in the broad 500-point range. It'll be yet to be seen if 25,200 gets sold on or no tomorrow. But the banks contributed today. The intraday of the bank and Nifty will tell you the story. Really buoyed by HDFC Bank, but a clutch of others too. And therefore, this 1.26% up move. But look at this. Trending move at the high point of the day and led by HDFC Bank, but the likes of IndusInd, Axis, etc. also participated. Mid caps and small caps didn't do as well, you have to admit. So it was largely a heavyweight led day and the market breadth was telling. Just quiet slumber, if you will, on the market breadth as well. But maybe the advanced decline comes up on your screen. As you can see, very flat. Now let's get the heat map up on the screen and you will see IT and banking right on top of the list. So from a Wipro, Tech Mahindra and an Infosys out here to an HDFC Bank, IndusInd Bank, Kotak Bank, ICICI too doing well. So that summed up the street's mood. Ahead of the numbers, Reliance was lying flat. ONGC, Maruti, Tata Steel. So some of the commodity-linked stocks came off a little bit in trade. Broader end of the spectrum, I think the star, you have to admit, was BSE, and we'll get there, but this is the BSE 500 list. Heikel, Aptus Value, Federal Bank on brokerage notes. There was strength in Kalyan.